Hey, good afternoon, traders. This is Trader Tim from eMoneyMind, bringing you a Monday market analysis for August 1st, 2016. So, August 1st, we have a new month, fresh start, and kind of kicking things off with the month of August with what we've been seeing for the last couple of weeks. So, this week on the news front, tomorrow we've got personal income and outlays, Thursday jobless claims, Friday employment situation. So a couple of numbers that could move the markets a little bit, but August is typically a fairly slow and crummy month for trading, so be on your have your guard up as we go into the month. Not much has changed on the daily chart as we inch ever closer to that 21.74.75. But I've got a couple of trade ideas for you this week and a couple of different scenarios that we could see. So the last 2 days, we have both Friday and then today, we've broken into new highs on the trading hours only. And so if we can continue higher, let me just pull up the extended hours for a second. You can see that today, coming up again, new highs, and while we weren't able to make it in the trading hours only, the overnight session was able to touch and pull back. And if we go to 5-minute chart, you can see that kind of move higher and then not only rolling over, but then getting another push up and then immediately being slammed down. So what I'll be looking for this week is, I would anticipate maybe a little bit of a consolidation still, or at least movement within this range. But it's possible that we, could continue up in the trading hours only session up to that 21.75, even though we hit it in the overnight. It'd be nice to see it hit in the intraday trading hours only. But as we get up there, what we've been seeing are these fade plays where, like on Friday, when we broke into new highs, it was immediately met with some selling and a nice trading opportunity for a short. Same thing with today. Once we broke out into new highs and trading hours only, it was met with very strong selling, which you're able to utilize the breakout method. So an interesting thing about today's trading hours only short, we had a trading hours only long set up from lows to highs, basically the first 30-minute range, and then we pulled back to the 50%. And so not only were we at the negative 23% target as we made the new high, but also breaking a new high, being at a target, and seeing the pattern of selling when we get into these new highs immediately, at least a short-term selling made for a great opportunity to take a short. And the big factor being at the negative 23% target of both the 5-minute, the 15-minute, as well as the daily chart. So looking for some potential shorting opportunities up here because we haven't been able to break out and continue on. So, while I do look at the Globex session, and it's important to note that we were able to break a little bit higher in Globex than we were in trading hours only, it was immediately met with selling. And so every time we've kind of broken above, just barely, this very tight sideways rectangle, this box pattern, it's been met with selling. We have not been able to break out and get some follow through. So looking for some shorting opportunities up here at the negative 23% target could be an early entry into a breakdown. And the real kicker, the real indicator, is if we break this 21.49, then I would look for some major falling, if you will, of the markets down towards like 2100 level. We can draw up the next retracement, and that would be a 2077s as of right now. But in the meantime, looking to see if we can get in some shorting opportunities up at 2175 area or anywhere above these recent highs and then look for a breakdown below the 21.49. It's still possible that the bulls could wake up a little bit, and if we do get some catalyst from some of these news announcements, that we do see a big body candle to the upside. But I mean, there's been so many opportunities. 1, 2, 3, 4, 5, 6. Let's see, 1, 2, 4, 6, 8, 9, 10, 11, 12, 13 days of this sideways consolidation in this very, very tight range. And they've all been, every positive move has been met by somewhat of selling pressure. We've had a couple of higher lows being made. So the first breaking point, while this 21.49 is the larger breaking point, and then I guess we could work backwards and say the second break point would be today's low. If we break that, that would be a major break. And then the first breaking point on the smallest scale would be a break of the low of the highest bar in the pullback on the 5-minute chart. So similar to what we saw today, only another high might be put in tomorrow, in which case, let's say we come up and hit a 21.74 and look to fade the low of that high bar and get this kind of a big sell-off that we saw today. That could be enough, in the next day or two to not just take us to lows of the day, but start breaking previous day's lows and act as the catalyst. So that would be the first indication, this reversal bar. So that's where, because we're at a negative 23% target, because we've come so far over the course of the last couple of weeks, couple of months even, looking for a potential fade opportunity could be, looking for a potential fade could be a really great opportunity. So not a whole lot has changed on the daily chart, but going into this week, I'll be looking to take some fade plays because we've been seeing that as a trend over this consolidation period. If we were to gap up, especially in this scenario, gapping up at highs could be a strong fade. Either way, maybe looking to bracket the first 5-minute bar off the open and get in some sort of trending scenario. But the rectangle still stands, if you will, 21.49, and then the target of 21.75 that we keep inching closer to in trading hours only. So that's what we'll be looking at tomorrow morning. Live trading at emoneymind.com/VIP. Give me a shout if you have questions. Tim at emoneymind.com. Thanks. We'll talk to you soon.